What we are talking about today is basically tax matters, and with special focus on SME, without being limited, without being limited to small and medium enterprise, So the first question I want to ask you is that, do you want to tell us what is tax? And basically, you will agree with us that what tax means to different person. Tax could mean different things to different person. Tax to individuals, tax to communities, tax to corporation, tax to an employee, tax to an employer. So we want you to just shed that light and let us take it one after the other. After that, thank you.
Okay, thank you very much, and I hope you can hear me clearly.
Yes, we can. I can.
Okay, good. Good. Okay, good. And I believe everybody can hear me. Well,
Please,
it's good to be here, and
I hear you.
Yeah, it's my pleasure to be here and to share my knowledge with us on taxation generally, requirement of taxation, understanding tax to every one of us. Okay, to a layman, tax is government coming to harass me, but really, tax, is just, in simple words, is a compulsory levy. Is a compulsory levy backed by law, and it is usually levied by the levying authority, which is the government, and they are part of our income or assets that tax tend to track. It tracks our income, it tracks our profits, it tracks our gains, and it tracks consumption. So I'm going to be looking at this tax base one after the other so that we can get a clear understanding of what tax is. When we talk about income, we are talking about employment income. So if I work for XYZ Limited and I get remuneration at the end of the month, that remuneration is what we call income. And under the provisions of the Personal Income Tax Act, the whole of that, my remuneration is taxable, save for some, incentives granted by law. For example, if you make contribution to the pension, it is going to be deductible from that income. And there's also a consolidated relief allowance, which is an allowance that needs to be taken out before you arrive at your taxable profit. So in a nutshell, when you get any benefit from employment, and benefit is not limited to the cash received at the end of the month. Also, when your employer gives you a car, your employer, rents accommodation for you, your employer gives you a driver, all these incentives are called benefit in kind. So you're liable to pay tax on both the cash received and all your benefit in kind. So that is for income. So the next thing I'll be mentioning is the profit. Tax also tracks your profit. How do you get profit? You can only get profit when you're in the business of trade. For example, you buy and sell, you're in a professional service firm, you're a lawyer, you're a professional, you're an accountant, and you have your own practice setup. At the end of the day, you get revenue, you will have to deduct all your expense, and you arrive at your profit. So for those in business, tax tracks, the profit you get from your business. So we've looked at income, we've looked at profit. So the next thing we'll be looking at are gains. And what do we call gains? Well, there is a regulatory framework for gains. We call capital gains, and it's the Capital Gains Tax Act. I know a lot of us are not very well familiar with it because it's not, that kind of popular tax that the government collects every day. But when you dispose your chargeable assets, for example, you dispose your car, you dispose your house, you dispose your land, you are supposed to pay capital gain tax on those assets and property. And capital gains tax is the tax rate is 10%. But most people don't pay capital gain tax. You buy gold, you sell your gold. Some people say, capital appreciation. When dollar goes, you are supposed to pay capital gain tax. Because we do not have that kind of structured system in Nigeria to track, transaction of people. And you will see that government is trying to make all of us go online, to be doing mobile banking. So that, when there is a lot of mobile transaction, government will be able to start the movement of revenue, because a lot of taxes with respect to capital gain. But in practice, what they usually do is that, for example, if you buy a car today and you want to register it, in the course of registration, they will look at your tax, your history. For example, you buy a G-Tax on that by the time you are doing your registration, or someone sells a landed property to you, and you are trying to register that property at the land registry. The tax authority at that point in which you are disposing collect capital gains tax from you. The capital gains tax of the seller, it is the seller, that's the person who sold the land to you, that made the gain. But because you are registering, because the government cannot track that person that sold the property to you, government will go after you to pay the capital gain. So that is, in practice, that is the way government tracks capital gain. And in the course of doing your transaction. And the last thing I need to talk about is tax on consumption. Okay, consumption is generally what we call goods and services tax, and in Nigeria we call value-added tax. So when you buy goods, you sell goods, you are supposed to charge capital. With the enactment of the Finance Act 2019, VAT is now 7.5%, and there are some transactions that are actually exempted from VAT, and a whole lot. For example, basic food item, pharmaceutical product, educational services, and a host of other things, listed, both in the new Finance Act, the VAT Act, and there's also a VAT exemption order issued by the minister. Exemption on baby food, baby pampers, and a lot of other things. You are not supposed to charge VAT on them. So all these are just to incentivize citizens, so that the life will be better. You are not paying VAT on essential. And the last one I need to talk about is tax on instrument. So and I'm supposed to pay stamp duty. So instrument, we're looking at stamp duty. And I'm sure you must have heard over the last few months that FRS want to be collecting 6% on rent agreement, and clarification now came later that no, rent agreement stamp duty is not 6%, it's 0.78%. So when we are talking about tax on instruments, we are talking about stamp duties, and the duties is, when an agreement is executed in Nigeria, you ought to pay stamp duty, and there are different rates, for stamp duty. For example, agreement to sell something, agreement, to rent your landed property house, agreement to assign interest in an intangible property like land, like intellectual property and the likes. You are supposed to pay stamp duty. So generally, these are the things, tax tracks. Now we understand that tax is a compulsory levy, right? It is levied by government, and it is backed by law, and it tracks income, profit, gains, consumption, instruments. So at the back of our mind, we must know that these are things that tax tracks. So any other thing apart from these are levies. So we must also understand that taxes are different from levies. Now, how do you know taxes are different from levies? For you to pay tax, you do not expect a reciprocal obligation from government to do a particular thing. For example, when you pay tax, you are just paying it by doing your civil responsibility as provided for in the Constitution, because the Constitution provides that every citizen must declare their income, truthfully and honestly to the government for the purpose of. But I know, a lot of things that will face, the government is stealing our money, government, our roads are bad, no light, government is not fulfilling their part, of the theory that says that, we elected you as our government. But the fact is that, tax is a civil responsibility, and we do not expect a reciprocal obligation when paying tax. although government too has a civil responsibility to provide all these amenities that we need as citizens of Nigeria. But the truthfully is that all the part of our constitution that tells the government that you must do this, you must make security, you must provide light, electricity, basic education, is injustifiable. So meaning that you cannot sue the government to enforce your right with respect to this responsibility of government. And in the constitution, where you cannot enforce it. The government can enforce his own rights, which he has to collect tax from you, by proceeding a defaulting taxpayer or someone that has evaded tax. So we must understand this principle of tax. And when we are talking about levies, by the time you start paying PSB, although it's a government year, but when you pay them, those are levies. You pay them because you expect a reciprocal obligation from the provider of that service. You pay your electricity bills, you pay toll gates, all those kind of things are levies because you pay because you are using. And, there's a reciprocal obligation, for you to fulfill that responsibility. So that is that about what tax is. The next thing we need to ask ourselves is that who are those that are liable to tax? Who are those that are liable to tax? The truth is that as long as you are earning an income, you are supposed, to pay tax. As long as you earn an income, either from business, either from trade, either from interaction, as long as you earn an income, you are supposed to pay tax. And when we are looking at those that are supposed to pay tax, then we look at, individuals like you and I, we look at companies, we look at communities, we look at trustees, we look at a lot of people in our environment that generate income from that, vicinity and environment. Even non-resident entities. Some people, they have property abroad, they have property in Nigeria, they live abroad. Yeah, they're supposed to pay tax, although we'll still get to that when we're talking about issue of withholding tax, we'll get there. So, and the next thing I need to talk about is tax base, which I've already discussed that when we are talking about tax, you look at the base. What are the base? Is either it is income, is either it is profit, is either it is gain, is either it is consumption and instrument. So those are the base of tax. And I think at this point in time, I've been able to do a little justice. Tax is so wide, you can't really cover the whole thing in hours, but I think I've been able to give a small gist of really what tax is all about.
Yeah, grateful for that. Grateful for the foundation. We are really going to drill you today. We have, as we were speaking and talking about the ones that I pay, and government does not have any responsibility to me, any reciprocal responsibility to me, and the ones that I have to pay, that they are obligatory to perform some things, and aside that, I still have levies. I was wondering, after I paid all this, what will remain? At least what will remain for me? I remember lately I was paid my leave allowance and everything, and about 500,000 naira was taken out of my money as tax. And I look at my area, I couldn't see anything that deserves that kind of money being deducted. So I still wanted to say something about around this withholding tax and VAT. The difference in that area before we now descend fully into the center of tax, because you went there, and that's why I wanted to quickly say something.
Okay. Quickly, I'll look at the withholding tax regime, and I'll look at the value-added tax regime in Nigeria. Now, when we talk about withholding tax is not a separate tax. It's an advance payment of tax. And, we go down to the history of withholding tax. It was realized that a lot of people don't pay their taxes. And one way in which government can at least collect something in advance from people is to say, if you are making payments to anybody, deduct a particular amount in advance. So that by the time that person is filing his returns at the end of the year, that tax he has paid is going to serve as a tax credit. Let me give an example. If I enter into a transaction to provide a professional service to someone, the withholding tax rate on service is actually 5%. Now, so if the service fee is 1 million, definitely 50,000 must have been deducted, as part of my fees. So if at the end of the year my tax and my total tax liability is 200 tax authority, I already have a withholding tax credit note which has been deducted, by PDAN when it was paying me for my professional service. So instead of pay 200,000, I pay 150,000 and I submit my tax credit of 50,000, making 200. So in essence, withholding tax is an advance payment of tax, which the payer of a sum to the taxpayer is to deduct as a matter of law when making payment to such beneficiary of such revenue or income. So just generally about, and when we look at what are withholding tax actually deductible on, if you receive dividend from a company, withholding tax rate on dividend is 10%. Although the law says that withholding tax on dividend is final tax. So that means that if I collect withholding tax, either as an individual, as a company, so if I collect dividend as an individual or a company, whatever withholding tax that has been deducted is final tax on that dividend. Then the next is interest. So if I issue out a loan, I'm a lender, and the borrower is paying me, or if you are a borrower and you are repaying your loan back, you have a duty to withhold withholding tax on the interest that you are paying back to the lender of such funds. And the truth is that as you are paying back, you have a duty to withhold withholding tax and remit to whether the federal authorities or the state authorities. And what determine where to remit your withholding tax, or what determine the liability to tax, is based on residency in Nigeria. For example, now, okay, I'll still go to that, but let me just finish the concept of withholding tax. So that is that generally about withholding tax. Now, when we are talking about value-added tax is a tax on consumption. That means that I would not need to pay value-added tax if I don't consume anything. So it's an optional tax, but optional but compulsory, because nobody is an island. I can't say, oh, everything I need in my life, I need to produce it by myself. I go to the farm, do my tomatoes, cultivate my yam. I'm the solicitor of myself. I'm the accountant of myself. I'm the waste, I'm the waste clearer for myself. Oh, my chairs, I fix them myself. My electricity, I fix them. As long as someone has rendered a service, so value-added tax is compulsory and not compulsory. The only way you can avoid value-added tax is if you do not require any service from anyone. And by virtue of the Finance Act 2019, value-added tax rate was increased from 5% to 7.5%. Although there was outcry all over, but you'll be shocked if I tell you that Nigeria's value-added tax is one of the lowest in the world. Even at 7.5, our value-added tax rate is still very low. Some countries charge as much as 25% for value-added tax. Although Nigeria, we are still charging 7.5, which I feel it's still low compared to other countries. And if you look at, okay, maybe I'll talk about that later. Is the fact that the tax to GDP ratio of Nigeria is still very, very low. And when I say tax to GDP ratio, what I mean is that if you look at the output of a nation, the output of a nation constitutes, the general GDP, which is called, the economics will call the gross domestic product. So there's a percentage, usually your percentage of your tax, should always correlate with your gross domestic product. Okay, this is the amount of our gross domestic product, then our tax to our gross domestic product should not only be as high as 20%. Some countries have as much as 30% GDP to tax ratio. But in Nigeria, our GDP to tax ratio is actually less than 5%. in fact, I'm sure we are the lowest in terms of GDP to tax ratio in the world. And one of the reasons for this is that, a lot of people are in the informal sector, and government is not capturing these people in the informal sector. And the truth is that the people in the informal sectors are the richest people among us. They are in the market, you see them selling clothes, you see that we wear tie, we're looking at them, oh, these people are uneducated, they are illiterate, they don't know what they are doing. If they are going to school, they'll be doing better than this. But the truth is that these people make more money than most of us. They're in the market, you see them in Balogun market, you see them in Lagos Island market, the Kwemu market, Katangua, and these people make a whole lot of money, but the government is not tracking them. So the truth is that, value-added tax is a tax on consumption. And whether you consume goods or whether you consume service, you have a duty to pay value-added tax. And there's something I must add, is that, there's something we also call input VAT when we are talking about value-added tax. If you render service, you are supposed to charge VAT on your fees and remit it to the Federal Inland Revenue Service. Federal Inland Revenue Service is only authority, that has the right to collect value-added tax. And when you remit, and if you are in the business of producing goods, for example, for those of us that we are in the production industry, we manufacture, we are supposed to claim input VAT. And what do you mean by input VAT? Input VAT are claimable when you buy goods for resale and when you buy goods in the production of other goods. And what do I mean? It means that, for example, if I decide to if I'm in the business of selling television, when I was buying those television, for example, if the television cost me 100,000 to buy, definitely I must have paid VAT to the person who sold me the television at the rate of 7.5%. So 7.5% of 100,000 is 7,500. Now, when I'm selling the television, I sold it for 200,000. So 7.5% of 200,000 is 15,000. That means that when I was buying the TV, I paid 7,500. But when I was selling the TV, I paid, I collected, 15,000. So for me to calculate the VAT I'm going to remit to the tax authority is my output minus my input. So my output minus my input, which is 15,000 minus 7,500. So if you look at the way value-added tax work, value-added tax is not the tax of the provider of the service. It's the tax of the man that has consumed that service. And that is why it is the person who renders that service that charges it as part of the revenue. So his own revenue, my professional fee is 1 million, but the law says that, if you are charging professional fees, you must add, value-added tax of 7.5%. So it is my customer or my client that pays me that, value-added tax. And when I collect the money, I take my 1 million, which is my own, and I give the relevant tax authority, which is the Federal Inland Revenue Service, their VAT on that sum that I've received. So just generally value-added tax for you. And for compliance purpose for value-added tax, there's a responsibility to remit value-added tax to the revenue authority on or before 21st day of the following month. For example, if I have transactions in August, that means that my VAT for August, I must remit and file with the FRS on or before the 21st of next month, and there are penalties, for not compliance. So that is a VAT and withholding tax for you in a nutshell.
Wow. So I want to say to everyone that if you have your questions, you can begin to drop your questions in the chat box. I'm seeing some questions here already, and we'll soon take it. But I want Mr. Obajimi to go through some of the things so that before we start taking all our questions. Mr. Obajimi, are you still there?
Yes, I'm here with you, sir.
Okay, sometimes you break off, maybe it's the network,
Okay.
Okay, so what are the preliminary tax requirements will I potentially need to start my business? As I'm starting my business now, what are the tax that I'm supposed to note that, okay, as I'm starting now, these are the things that I'm expected to pay, and these are the things that they should not bring to me?
Okay, well, thank you for that. as a small business, as a medium scale business, as a large business, the first thing you need to talk about is your tax registration. So the tax authority must know you. And you know the way corporate affairs now work. For now, as you are getting your registration, you are getting a tax identification number, either as a business name, either as a company, incorporated company. You usually will give you a tax, identification number. So one thing to do is that you must have a tax identification number from the Federal Inland Revenue Service. So if you're a business name, the only reason you need tax identification number is for your value-added tax remittance. And if you are a company, what you need, your TIN, is for all your taxes, because all the taxes for a limited liability company, a public company, all their taxes are payable to the Federal Inland Revenue Service. And for individuals, our taxes are payable to the State Internal Revenue Service of the state in which we are resident. So if I'm resident in Lagos, I pay my tax in Lagos. If I'm resident in Ogun State, I pay my tax in Ogun State. If I'm resident in Ogun State, but I work in Lagos, I pay my tax in Ogun State. So for personal income tax, what is being tracked is my place of residence. And it's my place of residence that determine, the relevant tax authority for the collection of my taxes. So as for a company, like I said earlier, what you need is your tax identification number, which you will use to, do your filings and the likes. And it's always advisable that as soon as you are registering for tax as a company, you must also get what we call your initial tax clearance certificate. So apply for it immediately. As soon as you are getting your tax identification number, apply for your initial tax clearance, just a tax clearance saying that you do not have any tax to pay, and it is also always important to have it. But as an individual, it depends on what you do. If you are in employment, that means that your employer, which is a limited liability company which you are working for, or it might not even be a limited, it might be a business name that you are working for. Your employer has a duty, to register with the State Internal Revenue Service to register as a payer, because there's a provision in the law that requires an employer to be the agent of the government for the collection of the personal income tax of his own employees. So if I'm an employer, January, I deduct payee tax from my employees, I remit it to the State Internal Revenue Service. And Lagos, it is the Lagos State Internal Revenue Service. February, I do the same thing. March, April, December, I do the same thing. And by 31st January of next year, I have a duty to file a returns to the Lagos State Internal Revenue Service, or the Internal Revenue Service of any state I might be resident. Now, I file a tax returns called the annual employer, declaration. In short, we call it Form H1. So if the Form H1 will consist a list of my employees, the amount of tax I deducted throughout the year, and evidence, of remittance of those taxes, and I file with the tax authority. So for my employees, the tax authorities will generate a payer ID for my employees. So those payer ID are the tax identification for those employees. And that is on the basis on which, the employees will be paying their taxes on a monthly basis. So as I am filing the returns on an annual basis as an employer, the State Internal Revenue Service will update the record of my employee to ensure that their taxes are up to date based on what I've paid. And that is why when you impute your payer ID in the Lagos State Internal Revenue Service platform, the tax in which you have ever paid in your life will show on that platform. So that is the duty for an employer, right? The employer's taxes is due to the Federal Inland Revenue Service if it is a limited liability company. But if the employer is in a partnership or a sole proprietor that is not an incorporated entity, that employer has a duty, to file his own returns not later than 90 days after the preceding year. For example,
sorry, sir. Sorry, let me cut you in. When you say his own returns now, you mean it personal or for the business?
Personal. Because if you look at, at this point, I must differentiate between an incorporated entity and an unincorporated entity. An unincorporated entity like partnership, like a sole proprietor, they are unincorporated. And we have incorporated entities like company limited by shares, company limited by guarantee, public company, private company. Now, for partnership and sole proprietorship, we say that they are fiscally transparent entities. And what do I mean by fiscally transparent entity? For some of us that understand, basic concept of company law, we said that for company law, there's a shield of incorporation that separates, the company as an entity from the owners of the business. So that means that the company is a person in itself. And there's no how I want to remember the words of Lord Denning when he was trying to explain the concept of personal incorporation. He said a company can be likened to a human being. It has minds and will, and the minds and will are considered in its directors. It has hands, it has legs, and the hands and legs are the employees that handle these tools. So if you look at the way Lord Denning talked about the company, he sees it as a person on his own, and it differentiates them from the owners of the business. So the company as an entity pays its tax, and the owners of the business pay their tax. So because the company is an incorporated entity, it has a duty to pay its own taxes to the Federal Inland Revenue Service, which is the regulatory authority here in Nigeria. And for the directors of that company, they are individuals. They are supposed to pay their taxes to the State Internal Revenue Service in the state in which they are resident. So what I'm now saying in essence is that for a person who is a partner in a business, a partner in a partnership business, or a sole proprietor, he needs at the end of the year to look at his revenue, to look at his expenses, and file his revenue and his expenses, based income and expense with tax authority. You remember when I was defining tax, I said tax is a compulsory levy levied by government and backed by law, and it tracks income. And when I talk about income, I say it is income, employment income. When you hear income in tax, it's employment income. It also tracks profit. So the profit will either be the profit of an incorporated entity, which are the companies, limited company we know, or the profit of an unincorporated entity like partnership and business name. So for a partner, a partnership, for a partnership or a sole proprietorship, it is not the business that the law tax. It is the individuals that the law tax. So if I'm a sole proprietor, I look at my revenue at the end of the year, I look at my expenses, I paid so amount to my staff, I pay so amount of electricity bills, I pay so amounts for repairs. My income minus expenditure gives my profit. It is on my profit that I pay tax on. And I'll file that returns with the relevant tax authority, which is the State Internal Revenue Service of the state in which I'm resident. If it is a partnership, the partnership files, his account with the State Internal Revenue Service, and each of the partners files, their returns based on their share of profit. So usually in a partnership business, is what is due to a partners are either share of profit, or they get, interest on capital, or interest on loan, or any other, any other. If the partners are the owner of the property, the business pay rent to the property. So as individuals in a partnership or as a sole proprietor, I have a duty to file my tax returns not later than 90 days following the year in which my trading activities occurred. So that means that if for 2020 activity, I have a duty to file my return with the Lagos State Internal Revenue Service on or before 31st March of 2021. While an employer, with respect to the taxes of his employees, has a duty to file that returns on or before 31st January of next year. But the employer has a duty on a monthly basis to pay the payee tax of his employees to the State Internal Revenue Service of the state in which the employees are resident. So, for example, if I have a company in Lagos now, and I have some employees that come from a place like Mowe, that is Ogun State, I have a duty to go and file their returns in Ogun State. So I'm not supposed to be paying their taxes to Lagos State. I'm supposed to be paying their taxes to Ogun State because Mowe is not Lagos. Yes, the person stays in Mowe, but the person works in Lagos. And, you pay your tax in the state in which you are resident. But let's assume that, you now have two places of residence. So the law says you pay your tax in your principal place of residence. And where is a principal place of residence? Your principal period of residence is that, is that state in which you have a permanent, residence. For example, now, if my family are in Ibadan, but I work in Lagos, and I build a house in Ibadan, but I come from Owerri to Lagos to work. So if you look at it, my principal period of residence is Ibadan, because that is where. Now, if let's assume that I have 3 wives, one is in Lagos, one is in Ogun State, and one is in Ibadan, and you can see that I have conflicting, place of residence. The law says that I must pay my tax in that place that is closest to my place of work, which is Lagos. So that is that,
Thank you.
About residency.
Thank you. So I will take it that having 3 wives was just an illustration. If not, we ask you to be paying tax on each person. Okay, so let me just ask 2 questions because of time, and so that we can allow others to also ask their questions. I have many questions here, but the time is running. I see that we have to really drain you. If it takes bringing you back, I will bring you back, and so that we can really maximize the other side of it, because tax is wide and we want to learn more, and we want to pay, and we want to see what government, those are the things that we'll still ask you. But do I get bonus for my tax payment? Do I get any bonus for maybe early payment of tax? Or
yes. For a company, yes, you get bonus for early filing. I think the bonus is about 1 or 2% for early filing. For persons, there are no provision in the law that requires for bonus for early filing. But for companies, yes, we have bonus for early filing. I think about 1 or 2% of your total tax payable.
But for individuals, do I have bonus?
There are no bonus for early filings for individuals.
So as a business, as a sole proprietor or partner, I will pay for myself and individuals in the firm, and I also do my VAT and my WHT. So those are the things that are expected of me. Okay, let me ask this one before we throw it. As an SME, am I entitled to any tax incentive?
Well, tax incentives in Nigeria is actually a function of the law, and there are a few incentives in the law, but generally they do not pertain to SMEs, but they pertain to business activities generally. When you look at the Ade-Peters Act, that's the regulatory framework for giving tax holidays in Nigeria, and that regulation, is administered by the NIPC, the Nigeria Investment Promotion Commission, and the Ade-Peters Act gives a tax holiday of 3 years to entities, engaging in qualifying activities. And one of such qualifying activities, for example, if you're in a space whereby it's still developing, there are not so many people there, and the government is trying to encourage you, you may apply to the government that that particular activity is included as a pioneer activity in Nigeria. And apart from that, yes, you can also get an extension of 2 years as a pioneer entity in Nigeria. That is that. Generally, companies are also entitled to capital allowance on the fixed assets, they purchase, for the purpose of, generating their revenue. Definitely they can claim capital, and also you can also claim investment, allowance for when you invest in plants and machineries for the purpose of rendering your service or production. And you can decide to go and establish your business in a free trade zone, your export processing zone, as the case may be. And when you are in an export processing zone, you are immune from the Nigerian custom territories. And what that means is that, you are not supposed to be paying tax to the cost. So the export processing zone is just like a carved-out area from the Nigerian entity, to encourage, manufacturers, providers of service, that engage mostly in export-related activities. So those are the kind of incentives you get under the law. Yes, and another incentive, which is a general incentive, is that when you make laws, you're entitled to claim loss relief. If you make loss in year 1, year 2, year 3, and you make profit in year 4, you're entitled to claim loss relief of those ones you made in previous years. So really, those are basic incentives that business are allowed to claim in Nigeria. And if I just may add, is that based on the provision of the Finance Act, small businesses now are no longer required to pay any tax. So what are small businesses? Small businesses are businesses that have turnover of less than 25 million in a particular year. So if you have a turnover of 25 million and below in a particular year, you are not supposed to pay any tax in Nigeria. And there are also companies by the Finance Act that we call the medium companies. That is companies with over 25 million turnover, but less than 100 million. Their tax rate is now 20% instead of 30% that was previously charged under the old Company Income Tax Act.
It's not what? I didn't hear that. It's not what?
It's now 20%. 20% for medium companies. And medium companies are companies that have turnover between above 25 million, but less than 100 million. So their tax rate is now 20% instead of 30%. Before now, it used to be 30%. Then, if you are in an agricultural business, your tax rate is still 20%. So that's an incentive for engaging in agricultural business.
Okay, thank you. Let me tell me, please. You might need to
basically, those are the incentives that you are entitled to under the law.
Okay, thanks. So tell me, you might help me arrange the questions from the chat box immediately after now. I encourage everyone to drop their questions there. But may I ask this, when you are starting a business, Mr. Obajimi, like if you are incorporating a company now, you have 18 months from the date of incorporation that you are not filing any returns. So is that related to business when it has to do with tax also? I think for small and medium enterprise, that this business is just starting, we are going to give that business tax holidays for a period of time before they start paying tax. Is there anything like that?
No, we don't have such tax holidays under the Nigerian laws. You have a duty to file your tax returns within 12 months or 18 months, whichever comes earlier. And for a company, in filing your tax returns, you must prepare your audited financial statement, certified by an auditor. You must compute your taxes. You must compute your capital allowance. You claim them. If you have loss relief, you claim them. If you have any other relief that is provided by law, you claim them. And this balance, which is your total or taxable profit that you apply your tax rate on, which you file with relevant tax authorities. And you must file your returns not later than 6 months after your accounting year. So if your accounting year is 31st December of every year, you must file your returns not later than 6 months after 31st December is 30th June. So you must file your returns not later than 30th June. So you must always count 6 months. So you must file your returns within 6 months, from your accounting year end.
Okay, thank you. So let's go to the question now. Temi, are you ready to take the question?
Yes, please.
Okay.
Okay, so the first question here, and thank you so much, Mr. Obajimi. That's been mind-blowing. Even as much as we want to grow our businesses, but at least we are happy that businesses that are earning below 25 million don't have to pay taxes for now. Okay, so the first question says, are NGOs completely exempted from paying tax?
Okay.
Did you get that question?
Okay, I think I get the question. Are NGO exempted from paying taxes?
Totally, completely.
Good. So when you're talking about NGOs, non-for-profit organizations, churches, mosques, and the question is, are they supposed to pay tax? The answer is no. Non-for-profit organizations are exempted from tax under the law. However, where a non-for-profit organization is engaging in a business activity, then those business activity are liable to tax. For example, now, I have a church, my church has one hall that we're using before we built our new church. And that was like, oh, this hall is wasting every Saturday, those who want to get married, let's start renting the hall out to them. That is now engaging in a business activity. So the church must pay tax on that aspect of the business activity, which is the letting out of property. It is a business activity. But if it relates to, your tithe, your offering, your seed offering, first fruits, all those kind of offering that you give to the church, those ones are not taxable. But when an NGO or non-for-profit organization is engaging in business activities, then it is, liable to pay tax on those activities.
Okay, thank you very much. I think that is quite clear. The next question says, please throw a bit more. I think you might have answered this question, but let me just still read it out. It says, please throw a bit more light on where to remit what? State or federal tax authorities. So where to remit what? So who collects what?
Okay.
State or federal? Yes. Then the second, then it's still within that question, it says, should a business that is into product distribution to retail outlets charge VAT? Into product distribution to retail outlets, should they charge VAT? Thank you.
Okay, so let me take it. What's the first section again? I think, let me just start from the first question.
The first says, can you throw a bit more light on where to remit what? So between federal and state, who collects what?
Okay, good. I'm going to be mentioning the head of tax, and I will be mentioning the relevant tax authority. For value-added tax, either it is being paid by an individual or being paid by a company, it is payable to the Federal Inland Revenue Service, that is the FRS. Now, the next is company's income tax. As the word company income tax goes, that means that the person paying it is an incorporated entity, which is a company. Then that tax is collected by the Federal Inland Revenue Service. That is for companies' income tax. Is a function of who is making the gain. If it is an individual that is making the sale, then definitely it is the individual that is making the gain. Then the relevant tax authority is the State Internal Revenue Service of that state in which that person is resident. If it is a company that is making the disposal of a chargeable asset, then you know that companies are ordinarily liable to pay their tax to the Federal Inland Revenue Service. Then it is the Federal Inland Revenue Service that is the relevant tax authority for collecting gains made by companies. For stamp duties, as long as there is a company in a transaction, then the stamp duties is payable to the federal government, which is the Federal Inland Revenue Service. Maybe the agreement or the transaction is between two individuals, then the relevant tax authority is the State Internal Revenue Service. What other taxes do we have again? Withholding tax. Withholding tax is also a function of the person. If it's a company, you are deducting withholding tax for its fees, it's payable to the Federal Inland Revenue Service. If it's an individual, it's payable to the State Internal Revenue Service. If you are a non-resident individual and you generate an income in Nigeria, for example, I live in the UK and I have a property in Nigeria that is generating rental income for me, whoever my tenant is supposed to deduct withholding tax from that amount and remit to the Federal Inland Revenue Service. So for non-resident individuals, either companies or individuals, the relevant tax authority is the Federal Inland Revenue Service. I think I've been able to cover all the fields with respect to taxes and the relevant tax authority. The next question, can you come again with the next question? Sorry, I missed it.
Okay, so the next question says, should a business that is into product distribution to retail outlets charge VAT?
Okay, good. You see, the charge of VAT is a function of the arrangement. So if I'm a distributor, I distribute to retail outlets. The question I need to ask myself is, what revenue am I getting from the distribution? Is my revenue agency fee? Is it a commission? Or am I into a resale activity? If I'm into a resale activity, I have a duty to charge my VAT. remember that the VAT I'm charging is an output VAT. When I was buying the goods from my supplier charged me an input VAT. So if when I'm selling to my my retailers, I also charge VAT. Definitely the VAT I'll be remitting to the tax authority is my output minus my input. That means the ones I paid when I was buying those goods and the one I'm going to be collecting, from the retailers, I've supplied the goods to. But let's assume that my own role is a middleman in this transaction. Well, the only thing I do is to link, the retailers with the manufacturers. And I'm just a middleman that earns a fee. It is only my fee that I get from that transaction that will be liable to both withholding tax and value-added tax. I don't know if I'll be able to answer that question.
I think so.
I think you have.
I think so.
All right.
Let me quickly go to the next one. So it says, what happens when the customer does not remit the tax withheld to the appropriate tax authority?
So it's a function of which of the tax that was withheld. But generally, when you have a duty, either payee as an employer, you fail to deduct, payee tax from an employer's remuneration, or you deduct it, which is very common. Employers will deduct and they will not remit. It is the same offense. Either you deduct and you not remit, or that you not even deduct at all, it's the same offense. You have a duty to withhold withholding tax when paying suppliers, when paying your shareholders dividend, when paying interest to your lenders. You have a duty to withhold. It is still the same penalty. And if it is VAT too, you've charged VAT or you didn't charge at all, it is the same offense. And for VAT, you have to pay penalties on a monthly basis. But generally, for all the head of tax, you pay a general interest rate and you pay penalty for non-remittance. Penalty for non-remittance is usually 10% of the amount you either fail to deduct or you deducted that you did not remit. And we also pay interest as a prevailing interest rate. Usually the tax authority will charge between 19% and 21% on interest. So you can see that the cost of non-compliance is so huge. So that means that you end up paying at 31%, of the tax liabilities that you fail to remit at the end of the day. And some tax authorities, and if tax authorities, were to, apply the law strictly the way it is, that means that it's going to be cumulative. By the end of the year, your interest, and principal amount you did not pay, there's going to be another interest and penalty in the next year. But usually the Nigerian tax authority are a little bit lenient. What they do is that they just apply the flat rate and tell you to pay that flat rate, because they know that if they interpret the law the way it is, it will kill a lot of business. So they just apply the tax rate. So that is generally about penalties for non-compliance.
Okay, let me quickly ask the question here. So I think I read somewhere regarding the fact that there are some people that are exempted from paying payee on their income, maybe depending on how much you earn or something like that. Is that applicable?
Well, for payee, the law is clear. When you earn an income from employment, you are supposed to pay tax on that employment. And we have a graduated rate: first 300,000 at 7%, next 300,000 at 11%, next 500,000 at 15%. There is the rate.
Is that annual or monthly?
It's annual. Those rates are annual. Now, if I now compute your taxes at the end of the day and now apply 1% of your annual income, and the taxes that I've computed based on the position of the law is less than minimum tax, then such taxpayer will be required to pay minimum tax. And minimum tax is 1% of the remuneration earned by such taxpayer.
Oh. So let's rush the remaining questions so that...
Okay, sir. So the next question says, I sell and supply farm foods. As much as I know that raw food products are exempted from tax, there is still a feeling that I'm not doing what is right. Please, what tax/VAT is payable for a raw food packaging promoted
No, promoter.
Promoter, okay.
Or the person doing the business.
Okay, good. When you sell basic foods, you are not liable to pay value add. You are not liable to charge value-added tax. You are not liable to tax. However, you have a compliance requirement to register for value-added tax and file nil returns on a monthly basis. If I have clients that are into agricultural business and they are multi-million agricultural business that their turnover is as much as 10 billion on an annual basis, but they don't pay VAT, they don't charge VAT because they are an agricultural company, and the law is clear that when you are an agri business, you are not supposed to charge VAT. But you have a duty to register for VAT and file monthly nil returns. So on a monthly basis, you just put nil, VAT payable nil, output VAT nil, and go to the tax authority to stamp it on a monthly basis. So even when you do not have a duty to pay tax, you have a compliance duty under the law to comply with the provision of the law. What is the provision of the law on compliance is that you must file your returns. So it is not enough, even when you are paying your taxes, it's not enough to pay tax. You must also file your returns at the end of the day.
Okay, sir. So if my limited liability company, if I pay tax for my limited liability company, do I still pay my personal income tax?
If you pay tax on your, like I said, when I was talking about what Lord Dennis said about a company, he said there are two different people. The company in itself is an artificial person in law, while the owners of the business are natural persons. But in the eyes of the law, they are persons. And the way companies are, in fact, companies can even be guilty of corporate manslaughter. So there's nothing you can do as an individual that a company cannot do. There is nothing. Name it. Company give birth, yes, they give birth by having subsidiaries. So there's nothing you can do that a company cannot do. And if that is the case, notwithstanding the fact that the company has paid its own company's income tax, and you've gotten, paid yourself salary as either the director or the promoter, paid yourself dividend, or you get interest on your loan that you've, lent to the company, you have a duty to also pay tax, on those income or revenue you have earned as a result of administering the company. I know there are some countries that look at the flow of the income generated by a company and say, okay, since the company has been taxed, the promoters or the owner of the business who gets rewards of investment from those businesses should no longer. I know there are some countries, but in Nigeria, you are regarded as different person from your company or your entity, and both the natural person and the artificial person both have a duty under the law to pay their tax and file their returns.
Let me ask a question here now. When you were talking about raw food, are you also talking about people selling maybe eateries, that woman selling amala, rice, and yam,
okay,
all those things?
If you look at the woman that that is selling rice, cooked rice, value has been added. Value has been added, to the raw material, to the
from
raw
the time
goods.
of purchase.
Yeah, value has been added. You've put pepper, you've put oil. The thing is now looking rosy. You want to go and eat your gumpe, and you are happy with the food, But if it is raw food, which we call basic food, your yam in the market, your bread, and there is a detailed list of exemption. The minister issued a value-added tax modification order and gave a detailed list. In fact, carcasses of chicken, carcasses of ram, this and that. So many things were listed which I can share with you, and you can share with the participants at the end of the meeting.
I appreciate that.
I will share that with you as soon as we are done. So the minister gave a detailed list of of items that are exempted from VAT. So that's just that. If you have added value to the food by cooking it, putting oil, putting pepper, then there's a requirement to charge value-added tax.
Okay, so let's run the questions out now. Please, if you still have questions, quickly drop it so that we can pick from them. We are going to put a deadline on it. And like I said, if we have to bring Mr. Obajimi, I'm feeling that we should bring you for part 2 of this actually, because there are so many areas that how do I can I file my personal annual returns? Can I file so many questions? Do I have to pay like you said, the following month? Or can I pay in bulk? We have a lot of questions to treat. And what's the difference between evasion, avoidance? What are the things that I can take advantage of within the law? Because I see that very well with Donald Trump, President Donald Trump of America, in his business even before he became the president, taking advantage of the edges of the law. So as participants, what are the things that we can take advantage? But we might not be able to cover that now. Today is Saturday, people might want to do their business, but we can break it into 2 parts if you don't mind actually.
No, it's fine, it's fine. It's fine.
Okay,
so someone, thank you. So someone here says, though I'm sure this is just you, I don't know if this will be your question, but filing tax return in America, they will pay you back from the taxes you have paid during the year. When will they start paying us from our taxes we paid in form of tax?
Okay. Yeah. I am aware that in America they do tax refund, and the only reason they do tax refund in America is if at the end of the year they realize that the tax that you have been charged is actually more than what you should have paid. So you get a refund. So fine, you've been paying taxes throughout the year, and at the end of the year, you file your returns. Someone seen as overpaid tax, and that is the only reason you get tax refund. But in Nigeria, I'm not sure we've gotten to that level where government has been able to capture all of us to pay our taxes. Like I said earlier, our tax to GDP ratio is still very, very low, and the people who are making the whole of this money are not even paying tax at all, and government is not even going after them. And these guys are the guys in the informal sector. They make a lot of money that you sitting in your office wearing tie that you think you are enjoying. They are in the market. You may think they are suffering, but they have a lot of money in their account, and they are smiling home every day. And those guys don't pay tax. So that's just the point. So when we get to that stage where we now have and because the government is not doing part of their own bargain, no good roads, no electricity. People are not encouraged to pay taxes. Even those of us that are paying, it's not like we are very happy paying the taxes. But we are just in a tight corner because we are already in the tax net, and we still try to provide security for ourselves. You decide to buy Jeep to be driving because the roads are bad. You are basically doing a lot of things for yourself. But in these advanced countries, some of them don't even have oil that we have, and the only thing that government is using to survive in those countries is taxes, and government is accounting for those taxes up to every penny and every kobo and every pound and every dollar and every cent. So if you have a government that is responsible, look at the period of COVID. A lot of government gave back to their people all the taxes they've been collected over the years, supported them to stay at home. Then what happened in Nigeria? Some of our people used the opportunity to steal money, COVID money. They stole it. Which palliative? They did, people were not happy, people were angry. It got to a time that, private individuals started doing social responsibility in the environment so that these people will not attack them. Until we get to that extent, we hope, government will do the right thing. And by that time, then we'll start talking about tax refund. But at this point, government, to get tax refund from the government is hard. Most of the time, some companies actually overpay tax in terms of withholding taxes. At the end of the day, some companies, the withholding tax that has been deducted from their revenue is actually more than the taxes they are supposed to pay. I once had a client that we did a withholding tax refund of about 5 billion. So the government was holding a 5 billion. And by the time the government Inland Revenue Service came to that company to do a special tax audit to determine whether they're actually owing the guy, they came with a lot of tax liability to show. Although the guy was able to prove at the end of the day, I think the guy collected about 3 billion. So the fact is that there are some entities too in Nigeria that, in the course of deduction of withholding tax from their revenue or from their fees, at the end of the year, at the end of so many years, they find themselves in a perpetual refund position, and they will now have no other choice, than to apply for refund from the tax authorities.
That's fine.
Okay, thank you very much. So the next question says, should businesses or individuals pay tax even when they are making losses?
Okay, I think the provision of the law is very clear on losses. When you are in business and you make a loss, that loss is supposed to be like a tax asset in your book, meaning that you can use it to, relieve future profits that you make. But truth is this: there's a provision in our law that talks about minimum tax. So let's assume that you are not a small company, that is a company that has a revenue of less than 25%. There's a duty under the law, to pay what we call minimum tax, which is a particular percentage of your revenue. So even when we are making a loss, yes, we'll pay minimum tax, but the loss that you've made in this particular year, in future years when you make profit, you can relieve those loss from those profits. And in those future years, what it will do is that it will reduce the tax payables when you make much profit in future years.
Mr. Obajimi, we are saying that somebody is making loss now. Somebody is making loss now. He said you should be paying tax. Tax on what?
Minimum tax. We call it minimum tax.
What if it does not get to that future?
And then where will he get that money from? If he's making loss, and where is he going to get the money for the tax for? If he already made loss, and the only thing remaining is for him to close that business, but he's still hanging in there.
Yeah, I get your point, and that is why if you look at before now, the provision of the law minimum tax actually tax a lot of things, but now it has been restricted. So at the end of the day, when you are not making a profit, the tax you'll be paying is very, very small. It's very, 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 very small. Just to say that you are in this business environment, you are enjoying government security. You cannot just say you won't pay any, just give us something. And these your tax laws that you've made in these years, don't worry. But remember, at times, a loss might not be a tax loss, it might be an accounting loss. So the fact that a company made an accounting loss does not mean that company does not have a taxable profit. And when you are trying to determine the taxable profits of a company, there are some things that are not allowable expenses. For example, you have depreciation, you have unrealized exchange loss, you have provisions for bad debt. By the time you had all those things back, you might still arrive at a taxable profit. So the fact that a person has an accounting loss does not mean that person will have a tax loss. Although there are some instances where you have both a tax loss and a tax profit. So you must understand the fact that a profit from an accountant's perspective is different from a profit from a taxman's perspective. Okay. So most of the time, by the time you have an accounting loss, by the time the taxman comes here, he's going to get a profit. So there's always be a profit. Okay. But not always anyway.
Let's run through the question. I want us to round up by 1:30. I still have a lot, we have to postpone this or adjourn. Let me use legal language now because there's so much. We still have the area of joint tax acts. Yeah, there are things that if they bring something that is not provided for under the tax heads, are we supposed to pay it? How do we handle multiple taxation? A lot of things are still there. But let's quickly run through these questions and let's push possibly for 5th of September for the second version of this. I hope Mr. Obajimi will be able to clear his calendar too, because I know we're always meeting at airports, so I hope.
COVID has not allowed us to travel now.
I'm traveling tomorrow. I'm going to Abuja tomorrow. So COVID is off. I don't know. You might run away again. So okay. So let's quickly take questions. Okay.
So is life insurance tax exempt?
Okay, I don't understand what the question the person means by life insurance tax. But I'm just going to add that
No, the question is life insurance tax exempt? As in,
Oh, is life insurance tax exempt?
yes.
Okay. Usually, as an individual, when you make provisions for your personal insurance, yeah, it's part of the relief you can claim for the purpose of your income tax. Yes, you can. When you insure yourself with personal insurance, you do pension contribution, group life, group life assurance. All those items are actually reliefs that you can claim as an individual. And you can also do voluntary pension. You can say, 8% that I'm contributing, I want to contribute 20% of my remuneration. So when you contribute that 20%, it is tax exempt. Those amounts that you've contributed, to your retirement savings account is tax exempt. Although over the years, people, they've abused, that provision of the law, and the tax authorities have been coming up with, policies, regulations to counter it. For example, some people will do voluntary contribution to their retirement savings account. For example, some people do as much as taking 70% of their salary into a retirement savings account. I mean, they contribute, they will come and collect it back the next month. So the tax authority was losing a lot of money at some point, and they had to come up with a vigorous regulation saying that, it is some of these pension fund administrators that were encouraging people to say, contribute money, you can come and collect it later. But now, if you contribute money, even if it's a voluntary, contribution, you have to wait for 5 years before you can collect. And if you decide to collect it next month, at the point of collection, the pension fund administrator has a duty to inform the tax authority, and the relevant taxes, will be paid on such, withdrawal.
What about my offerings and tithes and everything? Do I have exemption on them? Ordinarily.
On offering and tithe, you are on your own, sir.
But in a civil society, those things are taken out of all those voluntary people giving out palliatives during the lockdown and everything. Those kind of things are...
Yeah, in our laws, there are what we call allowable donations, and there are entities in which you can donate to. It's provided for under one of the schedules, the Company Income Tax Act. And when you donate to these specifically mentioned organizations, those donations are allowable deductions. But your tithe and offering, I contributed money. I know the minister, said something during COVID that those people that contributed money during COVID,
yes,
that they are going to get exemption. Although the regulation is yet to be out, and if the regulation does not come out before the time that people are filing their return, they will not be able to claim those exemptions. So I don't know if the government was actually truthful to those who contributed, but I know a lot of people contributed, huge amount of money running to billions, expecting that, government will give them relief, So until then, until the regulation is out, but ordinarily the provision of the law is clear on entities that that you can donate to for the purpose of claiming tax reliefs under the law.
Okay, let me run fast.
Maybe you just have can we just have just 2 questions to round off so that we can still be mindful of people's valuable time? Yes.
Okay, so are non-profit organizations obligated to file tax returns with tax authorities?
Okay, yeah, for non-profit organizations, like I said earlier, the fact that you are exempted from tax does not mean that your compliance requirements, you should also, abandon it. So non-profit organization, yes, they are supposed to register for tax, and there are certain returns that they are required to file with the tax authorities on an annual basis. And like I said, there are some non-for-profit organizations that engage in business activity. So on the profit they make from business activities they engage in, like I said, a church that has a hall that they let out on a weekly basis, or the church is investing in shares or investing in debentures, investing in government bonds, and a host of other things that non-profit organizations can invest in. So when they invest in those kind of activities, then they have the duty to file returns. But ordinarily, the fact that you're exempted from tax does not mean you are not supposed to file your returns. So returns is going to be paperwork saying that you might not be required to declare your charitable income and the likes. But at the same time, you have some returns that the tax authority require you to file on an annual basis. And in the course of the year, if you make a vatable disposal, for example, a church decides to dispose one of its buses, the church has a duty to charge whoever is buying that bus value-added tax, and the church has a duty to remit that value-added tax to the tax authority. You can see that it is not church tax that that engage in buying the bus from the church, or engage in any other vatable activity from the church that has actually So that's with respect to NGOs.
Okay,
Last
so
question.
Recently I learned that the government will be imposing tax on tenants. Please, can you shed more light on this?
Yes, the area of stamp duty on tenancy.
Okay, yeah, the law has always been there. We have a lot of laws in Nigeria that are redundant, tax laws. And the reason why is that, government over the years never cared, to tax Nigerians, because we had oil. The oil money was so much that there was a time that government did not know what to do, with oil money. So we had so much money and we're not caring about, some of the basic things in our tax laws. For example, we have the Stamp Duties Act that, nobody ever cared to enforce. Nobody was enforcing it. We had the Capital Gains Tax Act. Nobody was asking anybody for gains, they derive from the disposal of their chargeable asset. It was until recently that the Lagos State became very aggressive during Obasanjo's regime, when Lagos State funds were seized during the creation of additional local government by the ex-governor Bola Ahmed Tinubu. And Lagos State now realized that, we could generate revenue within Lagos State, and they started invoking the provision of so many of the laws, which some other states has now started following suit. And one of those laws is the Stamp Duties Act, which requires that when you enter into agreement, you sign instruments, you execute agreement documents, there are certain stamp duties, fees that you must pay, taxes that you must pay on those instruments. And those laws has always been there, just that they were not enforced. So when you sign a tenancy agreement with your tenant, there's a requirement, ordinarily a requirement, to stamp that agreement. And what does stamping of an agreement do to that agreement? Number one, it validates the agreement, and the agreement can be, tendered in court as evidence. Although the Stamp Duties Act is so clear on what you pay stamp duties on, it says you must pay stamp duties on any agreement executed in Nigeria. So if an agreement has been executed in Nigeria, no matter how small the agreement looks, you have a duty to pay stamp duty on that. And even if the agreement was not executed in Nigeria, but it has to do with a thing to be done in Nigeria. For example, I signed an agreement with someone in the UK for the construction of a building in Nigeria. Now, I have a duty to pay stamp duty on that agreement the day I bring that agreement into Nigeria. And the point is that because based on the Stamp Duties Act now, we now have electronic execution of contractual agreement, meaning that I can just put my e-signature on an agreement that I executed with someone in UK. Now, the point is that when will it be doing this in Nigeria? But the Stamp Duties Act now, by virtue of the Finance Act, it's not very, very clear that when I store an agreement in an online platform or on top of a system in Nigeria, then it has been deemed to be done. So even when I've executed the rent agreement, for example, my landlord is in the UK, I am in Nigeria. So when will it be said that the agreement has been brought to Nigeria? If the landlord emails the agreement to me in Nigeria, it will be deemed to have been brought in Nigeria because I'm going to save that agreement on my laptop, even if I don't print it out. So there was, I think when FRS issued that circular on landlord, tenant, and stamp duties, it said stamp duties must be 6%. And there was a lot of outcry from consultants, from taxpayers, and they now made further clarification that that it was a mistake, that the stamp duties on agreement is now 0.78%, less than 1%. So when you are executing an agreement with your landlord, with your tenant, you have a duty to pay stamp duties on such agreement.
To charge again.
To charge, yeah. And it's actually an offense under the law not to pay stamp duties to the relevant tax authority. And another thing is that when there's a dispute on that agreement, you cannot tender such agreement that is not stamped in court. Because I know there are a lot of cases in court now, landlord-tenancy relationship, and the landlord now will be in a position to make sure that in case I want to send that guy out, I need to go and stamp this agreement. And the thing is that even if you don't stamp, and on the day you want to stamp, probably because you want to use it in the court as evidence, the magistrate has a duty to compute all the penalties and interest from the day in which you refuse to pay. So that means that by the time you are paying, you'll be paying a lot more than you will have paid if you have executed the rent agreement at the point in which, you lease the house or the warehouse or the property to the tenant. So that's that about stamp duty already.
So, well, I wanted to say that what if there's no agreement between us? But let's leave that, because there are times that we don't have.
That's a question of law. That's a question of law.
Because by statutes, your statutory requirement, the laws are there, what I should give you as notice. So, but let's leave that now. Mr. Obajimi, Thanks so much. Please, I want us to unmute and